Hi everyone, so this is a recap so far from January 2025. So it's basically like a weekly recap. So currently my account is up about 3.06% return on capital this month only. Now this is realized and unrealized, and obviously we have some T-bills which are kind of guaranteed in a way but not fully realized yet. And the only two positions that I have are ZW and ZL. So ZW was closed this week, and ZL was actually opened on Sunday, right when the market opened, right after 8 p.m. So 8:30 p.m. Eastern. So these are the two products that we have, and yeah, grains to the rescue because we really don't have much to trade right now. But there's actually quite a few good opportunities that might be coming our way. So let's get started. And obviously, at the beginning of every video, I'll go over my strategy. If you've already seen it, so feel free to skip ahead, where I explain exactly why I opened some positions, about the CVOL and so on and so forth. But my strategy is short strangles, mostly, probably like 90% of the time, and I can definitely sell some short calls and short puts. I aim for 45 days and less. However, you will see that I actually opened a position with 103 days to expiration. And there's a pretty good reason for that. It was just the best possible deal at that moment. But usually I stay over the 45 or around the 45 days and less. But obviously, it's whatever the best current deal is, which for one of the positions this week was actually at 103 days to expiration. Now, these are all the products that I trade. Basically, there's nothing else. Sometimes I can, sell calls on the VIX pretty much. That's the only other thing that I've ever done for the most part. But these are only all the products that I really trade, all of them here. So my short strikes for these strangles are always at around delta 20, 21, delta 19, 23 sometimes. Depends on, again, what we have available, how we can make the trade work. And the delta 30 to 35 is usually for the short calls and short puts, because you need to collect more credit to have a better stop loss. My profit target is always 50% of credit. My loss target initially is 50% of credit. And then obviously, as I get to a 25% profit, or over here, I move my stop loss to 25% loss. So this is why the dynamic thing here. And when my position is at 40% profit, I move my stop loss to 10% profit. So I either make the 50% or I'll make 10%. It's really important. This is pretty good risk management, and it's done wonders for me because nobody hates to see a position go from up 45% to a full loss at minus 50%, right? It's terrible, and obviously it can happen, and you need to protect yourself. Now, I will always use CVOL for a good entry. So basically, just looking for overpriced options for, based on my criteria. And I'll go over exactly what happened this week. And if I exit a position, it's if the targets are hit, or I exit at 21 days to expiration due to gamma risk. I can adjust the position if needed, which basically never happens. But, I just put it here. So if I ever adjust the position, I can say that, it's here. But I would probably never adjust the position. And I can definitely exit early based on, geopolitical situations or some kind of supply and demand stuff. Doesn't happen often, but when it happens, obviously I'll explain the reasoning, and it's all logical, all makes sense. So, and very important, I'm just looking for a good opportunity or a good deal where the risk is worth the reward. That's about it. Very simple. So this is, I don't really like to use the word strategy. This is more like my toolbox, basically, right? So these are the best tools that I know to use. So the short strangles, 45 days, I know how to use those tools with these products. These are the deltas. This is the management for the position. So I guess the strategy itself is why I open a position. And let's go over why I opened this position on wheat futures. So I opened this position 49 days to expiration, a bit over 45, but this was the closest to 45. Now, I actually went a bit smaller on this position because I wasn't 100% happy with this position. I wanted a bit of a higher CVOL, but let's go over what we have over here, and then I'll go over the CVOL and why I opened the position and why obviously it was closed here for the full profit target, which is about 1.48% of total capital in just 11 days. Now, I took half a position, so I usually collect about 6% in credit and then take profit at 3%. but obviously I wasn't 100% sure, so I took half a position here. Now the reason for my entry is that CVOL was in a good spot, wasn't in the ideal spot, and I guess this is a shortcoming of for me, that I only look for the best of the best of the best, and I really can get to a point where I just I don't open a position because it's not absolutely the best, but it is like almost the best, right? Or almost amazingly good, which is something I have to work on, and kind of working my way, because there's a lot of trades that I just don't take because I don't know if it's a good or a bad thing, but just because it's not like perfectly good in my eyes. Now CVOL was in a good spot, range to the stop losses was very good, so you can see we opened the position right, give or take, when the price was here, and these are the stop losses at the time of opening the position. So you can see it's really wide. The price have been moving in this range, I guess you can say, since really here and here, whatever, like since November. So it's good enough for me. It's about, what is it, over a month and a half, right? So this is what I'm looking for, and just overall the range was so big, and obviously you can see that the price, the price kind of stayed in that range, so I feel pretty good about it. And obviously I decided to take half a size because I was not confident 100% on this trade. Now I exited the position because it hit the profit target, so that's perfectly fine. Now let's look at the CVOL and why I opened this position. And by the way, there's actually might be a good opportunity on wheat right now, actually. But I opened a position on, what was it, January 2nd? Yeah, so basically, was it January 2nd. So it was right as the new year began. Ideally, you would have opened it before, but obviously I wanted for the new year to begin, and only didn't open a position due to like tax purposes, so on and so forth. But this is where I opened a position. As you can see, CVOL went down, which means option prices went down with it. And I don't remember what did I closed it on the 13th. So the 10th was a Friday. Yeah. So it was actually closed, I think, on the Sunday. So not on the Monday itself, on a Sunday, when the market opened up. But overall, good position. Now, if you can see, CVOL was relatively high. So if you watched any of my videos, for me, a good CVOL would have been around the 30th. It would have been, clearly like high based on the past 3 months. Let's see if we can move it a little bit so we can, so this will be, or a bit more like that. All right, January 2nd. Yeah, so this is essentially the graph that I was looking at for the CVOL. So at the 30s, it would have been way more comfortable for me to open up. It was just a bit off, right? Or it was right over here. So a bit off. It was, what was it, 28.41. It's not a big deal, but at the same time, I just wasn't sure. I wasn't sure, right? Because anything can happen in the market, and I'm used to only taking certain positions. But I really need to learn to take these positions as well, with a full position size, because it happens all the time where they, like, 9 out of 10 end up profiting the full profit with ease. But basically CVOL was somewhat okay, but what I really liked was the range, and obviously that we have no news, we have nothing coming out now. On Friday, January 10th, we had the monthly report for the grains and for the meats. So obviously I knew that CVOL will drop even more after that report, which it did. And I don't think it reflects here too much, but this is what I was looking at. And if you look at the 6 months, for example, 30 is still pretty high, and obviously you can go as back as July, August, but this is where we have the harvesting, so I don't really count that. CVOL, it's always going to be way high, but you can see CVOL at 30 is really nice. So right now CVOL is actually approaching 30, right? So that's perfect. That's really good for us. I'm looking for a potential position. We'll see if we go with like 45 days, 60 days, 50 days, 30 days. I'll probably look at a position on Sunday when the market opens, and we'll decide, because this is going to be a pretty good position technically. If it loses, it loses. If it wins, it wins. But on paper, it's a really good CVOL. And one more thing is, why is the CVOL essentially going up, right? This is also pretty important, where the price is pretty stable, right? So this is also something that you want to basically go over and see what's going on, and not just read the news here, basically. Just go over the news and I just see what's going on. But basically, from so far what I gathered, and I haven't gotten through it completely. I usually go over positions, at the end of the day or when the market is closed, between 5 and 6 p.m. But basically, there's some concern about the supply because of the cold weather from Russia and Ukraine. They're just producing much less crop. So this is essentially their concern. However, the price doesn't really reflect that, I guess. Okay, because if there's less supply and the same amount of demand, the price should go up. So overall, I don't think there's anything fundamental, and this is where my judgment comes in, and I guess my experience. So this is why I would feel comfortable opening this position. And also historically, I know that around this time of the year, things usually get pretty sideways for the most part. But we'll see. I'll keep you posted. But this is a good opportunity that might be coming right now. Also, I think with corn, there's also maybe a good opportunity because CVOL is actually really high with corn. And I haven't even looked at what corn looks like. Let's look at it right now. So corn, So corn is, I guess, it's in an uptrend basically. Yeah. We'll see. Maybe we can sell some puts here. I'm not sure, but I will either open corn or wheat because they are pretty much pretty correlated for the most part, not always. But I would much rather open a strangle rather than a directional position. It just makes much more sense in my brain for some reason. Now the second position, which is still open, is a soybean oil position. I opened this position with 103 days to expiration. Now, the reason for the 103 days to expiration is because I was looking for a good range, basically. So you can see how massive the range is at the 103 days to expiration. And we can see that the price was basically moving within this range since like October of 2023, right? So it actually went out of the range a little bit on this past August. But overall, it's been moving within that range for a really long time. So this was essentially what I was looking for. Now, I received about 6.7% of my capital in credit. Now, this wasn't by design. Actually, I was shooting to about 6.1, 6.2, but we got just a way better fill price, and it just ended up being more. So I'm probably not going to take profits at before 50%, but we'll see. We'll see how it goes. Stop loss, strangle. I put my stop loss a bit lower. Now my current stop loss is already moved because the position hit 25% of profit target. Currently it's sitting at about 20%, right? So when the position is up 25% of profit, I moved the stop loss to 25% loss. So stop loss was already moved, which is always a good position to be in. And we are only 5 days into the position. It's already up 20%. I mean, it's been up at 25% just yesterday, actually. Well, this is Friday when I'm recording it. So that was pretty good. Now, why I opened this position. So CVOL was great, and the range, the stop losses was really, really good at 103 days to expiration. If you would have went with, I think it was 40 some days to expiration, it just looked terrible. And obviously this is not a good risk to take. So this just looked really good on the technical side of things. And we had a good CVOL, which I will go over in just a second. Now, I opened a skewed strangle to achieve the range because if you just open a normal strangle, as you can see, I opened it on it was a Sunday, but here it says on Monday, but it was at 8:39 p.m. Sunday. But as you can see, the distance to the call side and to the put side stops is different, right? And this is because I had to push the call side to be a higher delta and the put to be a lower delta because I wanted the range to occupy this entire price movement. Right, so this is also something, that you're just gonna use when you have to, right? So basically, you have a good CVOL, and you use your tool bag to to see if you can get something good or something working, right? This is the gist of any kind of trading, any kind of buy and sell business, any kind of business where you take deals, trades, whatever it might be. You just want to take advantage of a situation in the best way you can based on the tools at your disposal. So this is exactly what I did. So it's a skew triangle, really good stop losses. CVOL was actually up because of the WSAD report, which is the report. I think it's the World Agriculture Supply and Demand estimates or estimations. But basically, they reported on January 10th, which is it was a Friday, so it was exactly the day that we closed the wheat position. They reported that the sales and exports for soybean oil were lower than expected. So CVOL went up because of it, but nothing fundamentally crazy, right? This is the news of the past. There's nothing wrong with the supply and demand going forward. Just based on the previous data or the best data. It was not as good as expected by analysts or whoever is expecting. I'm not even sure who is expecting and who does the estimations. Someone does, and it was way lower than expected. So if we look at soybean oil, and let's take a look at the 3 months. So we basically opened the position on was it Monday? So the CVOL was not all the way up here. It was actually like a bit lower. This is the CVOL at the end of Monday. So when I opened the position, it was a bit lower actually, but it was a pretty good CVOL, right? It wasn't all the way up, but it was pretty good, pretty consistent. It was a really good range to the stop losses, and the reason for the CVOL to being up so much is nothing that really fundamentally affects the supply or demand for soybean oil, right? And so soybean oil, a lot of it is being exported from Argentina, Brazil, and I also look at the news there, and there's nothing wrong. Everything is fine with the crop. There's nothing to basically worry about at this point, or at the point of opening the position and up until now. As you can see, CVOL went up a little bit on the Monday, but just kind of crashed all the way down because there's absolutely nothing going on. And obviously, I look at the news all the time to follow what's going on with commodities. Things take quite a few days, sometimes weeks to unfold. If there's really some kind of bottleneck for the supply chain or some change in the demand, so on and so forth. But basically, this is the current state of the position. It still might lose, right? And you never know what's going to happen. But this is why you have to manage the position. But currently, this is what's going on. This is where we at. This is the alerts that I've put for myself. If the price crosses this side or that side, I just kind of want to know and see what's going on with the position. Maybe adjust it if there's something good to do for the adjustment. Usually not. But this is about it. So might open a wheat position. Now let's just quickly go over the other commodities. Now copper is also might be a good one to open a position on. You can see CVOL is really high. And CVOL is really, really nice. So copper might be another good one. Now I haven't really looked exactly, or I looked a few days ago, but I wasn't really happy with the CVOL, and also the GDP in China was coming out this Friday, Thursday, 9 p.m. Eastern, right? And China is the biggest purchaser of copper, so I wanted to see what copper will do after that report. And you can see here is weekly gains on China optimism, and still need to go over and see if we can open a position here. But as you can see, if we can get something like this, for example, it will have to be skewed most likely. Actually, no, it might be completely symmetrical. If we can get this kind of range, right? Last time the price hit it was at the end of May, so we can see June. So it's quite a few months the price was moving in between here. Depending on how many days, obviously we have to expiration. CVOL is perfectly good. This is a good position to open for anything. And obviously, you still need to look at the news and see why the CVOL is high. Is it something fundamentally that might affect the price of it, of copper or not? But this is for copper. And on gold, I think it also has a pretty high CVOL. Now gold, I'm not going to touch it up until the Fed's rate decision on the 28th and the 29th of January of 2025. So just a few weeks or a week and a half from now. Because you just don't know, and gold is more of a currency, so it's gonna react or not react. I don't know, but I just want to stay away from binary events that are pretty major for the economy and that can really affect gold. Same goes for the currencies. I'm not touching any of them because whatever the Fed will say, it will affect the US dollar, and all of these currencies are against the US dollar, right? So as you can see, some of them have a crazy CVOL, right? And currencies that are a bit more tough to trade because supply and demand doesn't really apply to them. And also gold really doesn't really play by the same rules as all of the other commodities. That's about it. There's nothing else that I want to talk about. I think it's been a pretty good week. Might have 2 more trades coming up this Sunday. We'll see. And obviously I'll keep you posted, and should be a good month for overall, hopefully. So thank you so much, and I will catch you in the next one.